cues as well. Not much really to talk about there, given the fact we saw a bit of a slip as far as the US markets are concerned. The Dow Jones slumped almost 240 points. There was a retracement when it comes to dollar as well. Remember, it has been at elevated levels of around 106, 107 thereabouts. But we're watching out for the jobs data today, so that will be critical to watch. Apart from that, there was that announcement that came in from OPEC Plus, wherein they have delayed the output by 3 more months to April 25. Again, not very surprising given the fact that we haven't been able to see a big strength in the US or the otherwise, Brent crude as well, because of the demand concerns which have been coming on global growth concerns. So overall, pretty much kind of a non-event as of today in the global setup is concerned. But let's take the conversation forward and talk about a bit of a medium term now. Santosh Rao, the head of research and partner at Manhattan Venture Partners, is joining us on the show right now. Santosh, hi, good to be speaking with you. To begin with, what's your take on the US markets and the kind of outperformance that we had seen? It's become the FII favorite of sorts, and that's why we had seen an exodus of FII money out of India. Now, do you see a bit of a reversal that perhaps the US markets have topped out and it's time to look at emerging markets again?
Well, not yet. I think we are still in the honeymoon period right now. We're expecting a lot from Trump. The market is expecting a regulatory cutback, cutbacks in regulatory regime. We're expecting more growth. It's going to be a growth economy. We want to see where the tariffs land. So all that stuff, a lot of cross currents, but the hope is that it's going to be good for the economy and the market is waiting for it. So the US economy, at least for 12 months out, the outlook is very bullish. So money will flow in here. I think that's the consensus at this point, I would say. And the Fed is not going to cut. They're going to cut one rate, 125 basis point in December in a few weeks. But next year, only 2 cuts are priced in based on the market estimates. So I think overall, there are not going to be that many cuts. So that's good for the dollar. It's good for the overall economy. So I think net, I would say US is still strong. The risk reward is much better here on a relative basis to India in particular. So it'll take some time for the money to flow back into India. I would say that's my opinion from this vantage point.
Right. Santosh, whatever happened to the China trade, which was all looking very attractive given the valuations, money moved out of India as well intermittently and, moved into China. You think that with Trump coming back is sort of pulling out again?
Yeah, I think China was never a all clear sign. China has too many other issues. There's secular headwinds in there in terms of the population growth, in terms of consumer sentiment, in terms of consumer demand, export. There's so many issues going on there. I mean, you can do a lot of superficial things like pump money into the system, cut rates, but the underlying fundamentals are still very weak. And it's a show me story, essentially, China is. They have been very erratic in terms of their regulatory crackdowns and this and that. So I would say it was a short-term trade, worked out. They did not follow through in terms of what they were planning to do. Much deeper market expected them to say more long-term things. So net China trade was short-term. It may continue for a while, short while, but not really. The long-term money is still coming out and going into other emerging markets.
Okay. So what is the trade for 2025? Is it back to India? Is it stay with Trump? Is it go hunting back to China?
No, for 2025, I would say definitely stay in the US. US is very expensive, don't get me wrong, but the whole issue is, I mean, with S&P at 22, 23 times, I mean, he's coming at the peak. So the earnings have to grow to really start justifying the multiples and to grow the multiples. So I think they will. The expectation is that with the regulatory cuts and the market broadening from the 6 or 7 the magnificent 7 companies to other areas, the materials, the industrial complex, and all that. So I think you will see a broadening, a healthy rally. So 2025, I would say stay in the US because there's still some firepower in the tank here in the US for 2025.
Okay, fair enough. But you talked about how India is still expensive and US looks better. But what do you think will make the tide turn in favor of India? Because if you're looking at growth, this is where growth is. There are a lot of these, small cap, mid cap companies which have the potential to become big. So if you're playing the medium term, long term game, at least experts are saying that India is the best place there. What's
Yeah.
then what's the factor that will make the FII money come back to India? What's your take?
Yeah, India. Don't get me wrong. I still love India. I think it's a great story. I mean, the GDP data was kind of on the softer side, but long term, it is still the fastest growing economy in the world. So I still think it has a long runway ahead, and it's going to attract a lot of money. But in the near term, that was my near-term impression, near-term expectation. But in a way, in long term, the smart money should get in at some point here, find a spot because I mean, you get in when the valuations are low and things are bad. That's when you get in and get good valuation. So I think you will see money come back. But at the near term, I think people are participating here. The animal spirits in the US here. So people are participating here. But I think India will definitely begin to attract the money back because it's a long-term, fundamentally strong story, and it'll continue to do well. The political climate seems very stable at this point. And yes, there are some issues here and there, cross currents. Even here, inflation is very sticky in the US. So, and there is a group of thought that inflation may actually increase next year. And if it increases because of growth, that's a good thing. But if it increases because of other issues, then I think that's a problem. So there are some issues, but right now it's all getting clouded with the whole really hidden because of the Trump rally and the Trump expectation. But there are some underlying issues here as well. And the Fed is aware of that. So they're not going to be aggressive in cutting rates because it is a lingering problem here. Inflation is.
All right, Santosh, really appreciate your time.
If you like this video, then like, share and subscribe to ET Now.